Okay, right. So terminal loss relief for the company, pretty straightforward as well. So what are we saying here? We're saying that really, when a loss arises in the last 12 months, if you remember, we talked about terminal loss relief for the sole traders. Sometimes terminal loss relief can be made, and how we do it, of course, is deal with any sort of current period claims. So deal with what's happening in that period. And like the sole trader, you can go back 3 years before the loss-making period. Yes, before the loss-making period. We'll see an example in a second. Rather than 12 months. So there's a bit more scope. So literally saying, look at what's happening in that period, in that very last period where you're making a loss. Do deal with it in that year, and then go back and you can use it back. Last in, first. Losses are set against total profits before QCDs on a last in, first out. So the first difference with your sole trader was that you can set it against total profit. If you remember, with your sole trader, you could only scope those losses against their trading income. Here you can set it against their QCDs. Sorry, you can set against total profits before QCDs. And this must be made within 2 years of the end of the loss-making period. So you do have some time to make the claim. Right, so let's look at this example here just to kind of illustrate what's happening here with terminal loss relief. So what are we saying? We are saying that you have this trading income, and this is you have a 9-month period where you have a loss. And so first of all, wipe out any property income here and look at what the net loss is. So 95,000 minus 8,050 minus 87. So that's 87,000 pounds worth of loss available to work with. So take this this loss, and then you make 3 years if you like and use it. But you can only use it, of course, they're telling you, well, there are no QCDs here. So you can wipe out all of this for it. You can keep going. You probably will only, I imagine, use, I mean, if you do this, this is what, 33,000 here, and this is 33,500. So you probably wipe this, and the rest you can then use here to get back, right? That's what terminal loss relief is saying. So slightly easier than when we dealt with the sole trader. If you go back to the sole trader, just as a bit of revision, you always have to consider any profit in the last 12-month period and not any loss to really find the actual terminal loss relief. Yes. So so this is pretty straight, and that's it. So look at what's going on in the last period of loss, and then carry it back 3 years. That's it, I think, for that topic for terminal loss relief. I don't want to complicate that. Again, this is just kind of saying everything we're saying. Really, the argument here is that you need to be thinking really, and just be aware that if you're going to carry forward, what are the issues? You have future profits. I mean, these are uncertain. Rates of corporation tax are now falling, so it never used to be for a while because they were the same. So the argument is, okay, I might carry forward because now tax is cheaper, the tax rates are falling. I could carry back and therefore get some money right now. You also have to think about the fact that how can I avoid wasting, if you like, QCDs? And we'll see this when we come to talk about groups. The key point is you cannot relieve QCDs. As when I say relieve, you can't carry them forward, so you have to use them in that year. So it's just about watching carefully what you can do. I talked earlier on about disclaiming capital allowances. So you may be better not to claim the capital allowances in that period if you feel that something's coming up. So you will have greater capital allowances in the future to use. So look through this again, and then I guess like all things, when you do a question, you get to really apply this. Okay, great. In the next video, we'll talk about property business losses.